Alright guys, I'm back here with another video to talk about one of my entry models that I've used to make around $25,000 in just under a year trading prop firms. I want to first start by saying that this is my first year trading prop firms, but I've been in the market for about 7 years, which has just been mainly buying and holding just on spot for crypto, stocks, things like that. But I have looked at charts and studied price and psychology and all that for that entirety of the 7 years. I'll show some of my payouts in a minute. It just shows it with the new Top Step dashboard, which is about $23,000 in payouts. It doesn't show the old one. The old one, I have about an extra 5K on there. I've invested about $3,000-$4,000 into this. And I just wanted to go over one of the entry models that I use. Normally, I just go over my live future trades and just recap them to show what real trading looks like. But I wanted to try to give some value and show how I kind of do it, what I made up. So we can go into here. This is some of my payouts from recent on the new Top Step dashboard. And here's some of the older ones. And you can pause it and look at it if you want. As you can see, I start to get more as time goes on, so you can see kind of the progression there. But I'm pretty satisfied with it for my first year. So I want to first start by saying as well that this book, A Complete Guide to Volume Price Analysis, helped me a ton. This is what this entry model is kind of based off of that I created. Highly suggest it. All right, now to get into the visual strategy portion of it. Going over this entry model, the very first thing I want to say is when trading this strategy or almost any other strategy, you want to trade what you see, not what you want to see. Like how some people will say react, don't predict. So trade what you see, not what you want to see. React, don't predict. Meaning if the market's going up, making higher highs and higher lows, but then you see, oh, well, this thing happened or something, I'm going to go short. But it's been going up this entire time, you know. That's where the psychology and things like that come into play, but that's a whole different subject. But I feel like this entry model that I've made helps me personally to react and not try and predict. So we'll just get right into it. The very first things that I always need on my chart are volume down here, and I've created this, of course I got volume down here, but we're gonna go off this infographic that I created. So we got volume down here, we got a volume profile over here, which some people say is useless, but I think that's BS. We got a volume profile over here, and then I usually have an NVIDIA chart or something on a different screen, and it has the buy sell volume separate, which you can find on TradingView. Which can also help you. I like to use that, at least for me. So we'll get into it. So the first thing that I want to look for is that, and I like to use 5-minute and 2-minute candles for this strategy with a 25-point stop loss and a 50-point take profit. Yes, I usually always have a fixed stop loss and a fixed take profit. Sometimes I will finagle those a little bit, but I try not to move them around a whole lot. My take profit is a little more discretionary. I'll usually at least do a 1-to-1 RR. It just depends on what's going on in the market, but usually I try to take at least a 1-to-1. A lot of time it's a 1-to-2. But the very first things that I want to look for is who's in control, the buyers or the sellers. And how do we figure that out? Well, we have higher highs, higher lows, higher highs, higher lows. So I just think of it like a market. And right now, everyone's in the line to buy it. You know, everyone's in that line to buy it. So the second thing that we have, which this is the part where you can react to. So do we have more volume on bullish candles. When price goes up, does volume increase? And we do have that. And price goes down, we have volume decrease. So the main thing we have here is this. So we have this big volume spike along with this engulfing candle or fair value gap. So you got to think what's going on under the hood when this happens. So right here, a bunch of aggressive buyers came in and just ate all the sell orders on the order book. Sometimes I'll say, oh, there's a bunch of buy volume there. But what that really means is there's a bunch of aggressive buyers there, because there can never be more buyers than sellers. The aggressive buyers just come in and take off all of the orders on the sell side. And so that creates something like this. They come in, it's a lot of aggressive buyers. So we now have an area of demand created right here. And so if you don't know what a fair value gap is, or an engulfing candle, I like to enter, a fair value gap is this right here. It's these wicks right here to this wick right here, and this little gap right in here that was created. And I like to enter somewhere in here, or on the previous, as you can see, this was a previous support or resistance level. It broke through that on big volume. You could enter off that. And if we look to our right, to our volume profile, let me just take these off. Volume profile just shows where a lot of volume was conducted at previous price levels. So it usually looks something like this, and it has the point of control going across the middle. And if we looked over, we can see that a lot of volume was conducted here, and then here, and then here, and then it drops off. So I want to enter as price comes down into these areas on the volume profile. If that aligns with a previous level like this that it broke through, and where the fair value gap is, but here and here, that is a great entry for my strategy. Another thing is that if I know I'm in the right, I'll get a nice wick out of here. And you can see as it wicks, volume will rise out of here. Okay, meaning that the aggressive buyers came in once again to push it up through here. Okay, and now I want to talk quickly about the stop loss. So I like to put my stop loss below the 5-minute or the 2-minute, whichever, the fair value gap that I entered off of. Either that, or if I have the room to put the stop loss below the volume ledge, which I call this the volume ledge right here. This is the last big volume candle on the volume profile where volume was conducted. So you can see as the volume ledge comes down, the volume really drops off right here. And this is usually how it looks. And this means that a lot of people were buying it, in this area from here all up in here, because the buyers are in control. We have higher highs, higher lows, higher highs, higher lows. The buyers are in control. The buyers were willing to buy it in this area, indicated by this volume profile, and these volume bars were when the candles went up. The volume bars increased a lot. So we know that if price were to come down and break that, so if it did something like this, we know that the trend could possibly change right there, because the buyers didn't support it like they did last time. But all trades have a little bit of randomness to them, and you're going to have losers all the time. Each situation in the market is unique, and there are times where this strategy fails, of course, just like any other strategy. If anyone tells you they have a 100% win rate, they're lying. And win rate is kind of irrelevant. That's just based off your RR, but that's a whole different story. But yeah, those are some quick tips with it, that if you know you're in the right trade, it will usually wick out of the area of the previous, where the fair value gap was. It will wick with volume, and it will land on one of these volume ledges. Usually, I didn't do this great, but usually, say at the bottom of this one or this one, it usually comes down like, say if you have a volume ledge like right here, it usually will come down to the bottom of the largest volume ledge. But I like to go ahead and just enter on the fair value gap, like right in here, like right here. Or since we had this previous level right here of resistance / support where it broke through, I would move it, to right here. And another quick tip on NQ, it usually respects if you look to the left, you see how it's 26,011. It usually respects the hundreds, the 20s, the 50s, the 80s, and then back to the 100. Those will usually be areas of interest. But yeah, that's just a quick overview, a bird's eye view of this strategy. And I hope this helps. Okay, I wanted to put in some live examples of that entry model, because I know a lot of people don't like to go over live examples like this. But if you'll look where our order is, or where we got filled at, it's that green line. We have a 1 minute fair value gap. We entered inside of that fair value gap. And this is a combine, but I just thought it was such a good example. I liked it. Right here, we're trying to add in, because I want to make 1,500 on this. We go ahead and mark it in right there. We have about everything we need. So if you look, we have higher highs, higher lows, higher highs, higher lows. And we have our volume candle, our fair value gap. We entered on the first one. We had another smaller fair value gap, and then we entered in there on our second entry. And the reason I did that, and the reason I'm risking so much, is because when I trade a combine, I'll trade it to where I want the 1,500 one day and the 1,500 the next day, so I can pass it. So you can see there we had the nice wick out of there, and we're starting to try and break through this little range at the top there. And you can see to the left, that's where the volume profile, the top ledge, is as well. And I believe that price consolidates here for a little bit and then goes through. But this is from October, but preferably on my live accounts, I will use 2 minute and 5 minute fair value gaps. Like I said, I will not trade this risky on a live account. This is just because it's a combine. Because I don't mind resetting a $50 combine sometimes. But yeah, you can see price pushes through, and then got real close there, and then it got pushed down on volume, but then we got it. We got tagged out of the trade. But there's just a little live example. All right, another quick example. So this is a 2 minute. We have the small volume on the 2 minute candle, but see over there to the left on that long candle, it's small, but it is larger volume than all the volume around it, meaning the buyers are more aggressive there than anywhere else. And you can see this looks like a scalp, but this is 50 points. And we do have an uptrend on the 2 minute, as you saw, and we got a nice little scalp. All right, on to the next one. So I wanted to show one where the strategy fails. So we have everything in place that we need right here. We have our nice fair value gap with volume. It's on the 2 minute. We have higher highs and higher lows with a perfect entry there around the top of that volume ledge, which would be the value area high. And everything actually looks pretty good, but this just goes to show that every situation in the market is unique, and you will have losers no matter what. And even right here, I'm getting nice bounces out of there, we're a few $100s in profit. Even on the MACD is crossing up in my favor. And I mean, this was a great setup. And the main thing is just when you have a loss, you have to accept it and move on. It's just a game of probabilities. The market's not out to get you. No one's hunting your stop. It's just what happens. But I entered right, as you can see to the left, right on the wick of those previous highs. And right here, we're 400, almost $500 and $600 in profit. And this is one reason I've been thinking about just switching to a 1-to-1 risk to reward, because prop firms do favor higher win rates, especially if you're using more leverage like that. But you can see it comes down again, and it retests, and it's almost like right there it just made a lower high, in a way, but it hasn't made a lower low yet. Now it's broken. Look to the left, right there. My entry is on that time frame. You can see it's breaking down into that volume ledge. It's still, look, you can see there's some buyers there. But still look, it's still got a nice reaction. But looking back, I should have just hugged this stop up right under that low that it just made, or taken the profits there, because that's $250, for a winning day, and that can go towards a payout. But yeah, then the psychology starts taking over. Maybe it's just making this bull flag, and you're making excuses, and really at this point the trade it's still valid. It's still holding that level. It's still in an uptrend. The volumes and everything's in my favor right now still, but it's starting to slip. The bulls are slowly losing control, and I apologize, it's just sped up so much, but there's just so much stuff to cover and all that. But anyway, this trade goes down for a loss, and I hope you guys enjoyed this video. I hope you trade well, trade smart, and I hope this brought some value to your trading or to your life. But if you like the video, I'd appreciate it if you like and subscribe. It does so much. I'm a small channel. I appreciate you.